Hello and welcome to Fintech Insider Insights. I'm David Barton-Grimley, Strategy Director right here at 11FS. In this episode, in association with Curve, we'll be looking at what could well be the next frontier in the payment space, digital wallets. It's been 10 years since Apple Pay was introduced, and in the decades since the service has picked up 507 million users. That's a huge amount. The broader Apple Wallet proposition has dominated the e-wallet category ever since. But the market is starting to shift. Following regulatory pressure from the EU, Apple has opened up the NFC chip on their handsets so that users can change their default wallet. This change means that there is a wide open market of 1 billion plus iPhone users for wallet providers. So it's a huge shift coming on down the line. So to talk about all of this, first up, we have a return to Fintech Insider for one such entrance into the wallet market. So Shachar Bialick, founder and CEO of Curve. It's great to have you on the podcast, Shachar. Can you tell us a little bit about what you've been up to at Curve recently?
Hi, everyone, and thanks to be on the podcast again. So Curve developed the best wallet technology in the market that can actually have a way to compete with the likes of Apple Pay and Google Pay and Samsung Pay. And the main reason for that is because for almost 9 years, we developed a cutting-edge wallet technology that does not use the same technology that Apple uses, which is called pass-through technology. Instead, it uses what we call in the industry a stage wallet or back-to-back wallet technology. And that wallet technology allows us to offer customers unique wallet experiences that other wallets like Apple Pay cannot offer. For example, Curve is the only mobile wallet that eliminates your FX fees when you spend money abroad. So with Curve Pay, you can spend money with your Barclays card abroad and eliminate the 2% Barclays will otherwise charge you in real time at the mid-market rate. In addition to that, we have other unique benefits. For example, the only wallet that gives you double dip rewards. You keep earning rewards from your underlying cards while you're earning rewards on top of that from the Curve Pay wallet. And you're also able to go with Curve Pay, go back in time and move past purchases between accounts. So if you made a transaction with Curve Pay from your Barclays account last week, and you found that a different card gives you better benefits, you can go back in time and move from card A to card B through the Curve wallet. Moreover, what's unique about the Curve wallet technology, unlike Apple Pay, Curve does not charge the banks any fees, and the Apple tax fees are a big problem for banks today. It's almost 50% of their interchange revenue in Europe and the UK. They don't like it. And moreover, Curve works with 100% bank coverage across all markets. We do not need to integrate with each and every bank, which again reduces cost to the banks, but more importantly, gives a more wholesome experience to customers across different banks, different institutions, and also different omnichannels, whether it's through the wallet, whether it's through the Curve Pay card, or whether it's online.
Awesome. Yeah, very interesting. Thanks for that. And next, it's a Fintech Insider debut for Tom Noyes, partner at Starpoint LLP. How are you doing, Tom? Can you tell us a little bit about yourself and what you do at Starpoint?
Sure. Starpoint is my own creation. So I'm a former banker, former tech guy. I've spent time in Google, spent time with Citibank. I actually, given I think a few of you listeners are in the UK, I was a global head of channels for Citi, working for Ajay Banga, and my team, we bought Egg in 2007. I would say, listen, UK is tip of the spear in banking innovation. You've got some of the most well-educated consumers, a lot of innovation coming out of there that I think you're at least 5 to 7 years ahead of the rest of the world. So anyway, banker, Starpoint, we deal with, the top 10 players in payments and fintech that are public. And then we also deal with maybe a few 10 or so private companies that are up and comers and people we really believe in, like Curve.
Awesome. Yeah. And by the way, Egg, I remember that, one of the sort of original early fintechs before fintech was a thing, I think, back in the day. Anyway, it's great to have you on board, Tom. And last but not least, it's a warm welcome back to the podcast for Fliss Berridge, director and co-founder of Ordo. Welcome back to the pod, Fliss. How are you and how are things going at Ordo?
All great, thank you. Thanks ever so much for having me back. So I'm Fliss Berridge and I'm one of the co-founders of Ordo, and Ordo is an open banking payments platform. So we launched in 2020 and now we have a variety of payment methods available for all types of merchant. And so merchants can now collect funds using open banking via in-person and QR codes, or via call centers, or via paper or email billing, or e-commerce pay now buttons. And we're heavily involved with everything open banking and the ever-changing regulatory environment that's going on in the UK at the moment.
Awesome. And on that note, let's get into the discussion. So to kick off the show, we'll take a look at how the EU has forced Apple to compete and how regulators have put in place a new battlefield for digital wallets. So on that question, Shachar, it might come to you first. Let's talk about digital wallets generally. I mean, in the introduction there, you were talking about some of the amazing things that Curve are up to and what the product actually does. So how ubiquitous would you say are digital wallets now?
I think in the past 10 years, since Google Pay, Apple Pay, and Samsung Pay emerged, and especially thanks to the work Apple Pay has done, digital wallets, which is a very convenient way to pay, you just leave your home with your phone, has really began to go on fire across Europe and the UK, but not only. Last statistics I've seen in Europe and the UK, we're looking at about 40 to 50% uptake by customers of paying with their phone, mobile first. In different regions, for example, the Nordics, you would see much better penetration, like 60, 70% penetration of mobile wallets. And in some, of course, other regions like Latin America, you would see a lower penetration. Also in the US, you would see 30 to 40% penetration. But when you go to the biggest cities in the East and the West Coast, you would find in New York around 50, 60% penetration. And I think one of the biggest drivers we've seen in cities is actually the tube here in the UK or the subway in New York, that once they've enabled this payment, it just makes it faster entry system. So that helped the acceptance or onboarding into mobile wallets by customers.
And it really, really is ubiquitous. And actually, if you look at Apple as an example, and doing some research for this podcast, I was looking into some stats as to the kind of dominance that Apple has. Anywhere from 30 to 67% of all in-store payments across Europe seem to be done through Apple Pay. And that kind of leads me to my next question. Tom, I'll come to you on that one. How do you think Apple was actually able to dominate this market for such a long time? It's been 10 years. It's a huge amount of time in tech.
Yeah, I think they've got some advantages from a tech side, or have had. I think they've got advantages from the organizational side, and then certainly on the economic side. So maybe I'll start with that last one. Really, they're the only. Apple would be the most card-friendly big tech on the planet, and because they've gotten economics, of at 15 bips in the United States for a credit card, somewhere around 7 bips in the EU area, there's economics for a wallet, and I think it's fair. I mean, their pricing is fair for the value they provide, but really no one else has been able to crack the code and getting those economics. The next their advantage organizationally, it takes time to make payments work. It takes time to build a wallet. It takes commitment. It's you look at someone like Google. Who I was in Google Wallet launch in 2011. I was in Mountain View. I was there, part of the team. They've gone through payment leaders quite a bit. I think their new team is just tremendous, and I think you're about to make some changes. But it takes time to make that work. And then technically, they've had a walled garden with really high walls, and it's really just started to break. I think you've seen Apple opening up the SE, and Apple treats me like a journalist, and I get kind of a preview on the things that they're going to announce. And when I was talking to Jennifer and the Apple team on the release of this, opening up of the SE, which, by the way, in the Eurozone, it's going to happen in the UK. It's not in the rest of the European area because of the outstanding kind of fines and disputes. But it's transformational, and I think it's going to enable a new kinds of wallets like Curve of something that's cross-platform, and we move from this world where you're a platform-centric wallet or an e-commerce-centric wallet or a card, centric wallet into something that can be, across every platforms, that consumers operate in.
And just to add to that a bit, about 3.5 years ago, Curve started the appeal with the European Commission against Apple because we found that blocking the NFC is anti-competitive. And it's a funny story by itself. We called it Project Ella, based on the Ella Valley in Israel, where David fought Goliath and won. And we assume that once they're going to lose in one market, the excuse of privacy and security will no longer stand in any other market. And it was true. In February, the DOJ, a month after, sued Apple to open the NFC, and Apple made a PSR-initiated activity also with the view of eventually opening up the NFC in the UK. And I think Apple in August 14 made the right decision to open the NFC. And I think they're very confident in themselves. It's going to be very hard to make a dent there, which I personally doubt. But when you look at the appeal to the European Commission, the main factors of decision of the European Commission, it's really that the restriction on opening up the NFC is, in our view, what made Apple get the traction they've got with the banks. And a good example for that is Google and Samsung, pretty strong brands by themselves, a lot of network and money, and great tenants as well, were not able to get even 50% of the coverage Apple has made. And the main reason for that is because the bank initially said, if the NFC is open, my customer will pay with their phone through the Barclays app, and did not participate in those wallet schemes. Whereas with Apple, they had no choice. The Apple brand is so strong, and customers demanded that their bank card will work with Apple, and the bank had no choice than to participate and pay the Apple tax to Apple. And I think that created a virtuous cycle flywheel. It was a very clever decision by Apple to block the NFC to drive market share. As much as it's a smart decision right now to not go with litigation and regulatory work for the next 3-4 years and just open it up and maybe make some other commercial revenue lines from opening up the NFC to the secure elements to third-party participants.
And do you think now, by the way, that this will happen globally, or is it just in the EU that it's happening, or is this only the first?
So Apple initially in January 2024 has conceded to the European Commission to avoid further fines and intervention and open the HCE technology, i.e. competing wallets without access to the secure element in Europe. But in August 14th, and I think that's what Tom was referring to in discussion with Jennifer, that they get a preview of what Apple is about to announce. In August 14th, Apple announced that they're going to open the NFC and the secure element in all key markets. So you'd see Latin America, North America, Canada, and the US, UK, I think New Zealand and Australia is also there. But basically all large markets of Apple, NFC is being opened up.
Fliss, I want to come to you on this. I mean, it sounds like Apple's core proposition here was just that it's Apple and, they can restrict control of the NFC chip, but that has a time limit on it, right? Is there something... Has there been any fundamental innovation in the Apple Wallet since it launched? I mean, I'm a user of it and it works. It works really well, but I haven't seen a progressive release of features that would, make it sticky to me.
Yeah, I think you're right. And I'm not normally one to advocate for dominance and back monopoly players. I spend a lot of time talking about bank monopoly access in the UK for variable recurring payments in open banking. It's my mission to get VRP mentioned every time I'm interviewed about payments. But going back to what Shachar was saying, they did get great coverage from the banks, and that allowed them to have this dominant position and restrict access. And the only reason they were allowed to get away with that was because they have such a good product for their consumers. They are the ultimate consumer-focused company, aren't they? They've created such a loyal following. Their customers will probably like whatever they do and follow them everywhere. And so with that loyal following, they were able to restrict their wallet and functionality. And then, as Shachar was saying, banks can't refuse to have access to them because there would be such a backlash, such a lack of custom. And so when you've got such loyalty and such coverage, you kind of then don't have to do much. And then there comes the problem. So it's an advantage at the first start because you're having a consumer proposition, creating a proposition that consumers will follow, allows new technology to come to market, a digital wallet, and for it to be ubiquitously adopted. But then something else has to happen once you get to a certain point, rather than allow the dominant player just to sit on their laurels and sit back and get lazy, if you like. And I think this is the next stage now.
And how do we think, panel, anyone to answer, that Apple will change their business model here from, Tom, as you were saying, charging 15 bips, for example, in the US, now that it's all open, other providers come in. Is it a charge to be able to get access to the SE and the NFC chip? Is there a sense yet coming of how they'll continue to monetize?
No, I asked the Apple team specifically that, and no, beyond just being a certified developer, there's no fee. I think they saw my belief on their internal strategy that they're so far ahead of everyone, that they're going to be able to maintain their lead because they're not sitting still, but they're not charging access fees. And remember, in this wallet, it's as in all payments businesses, there's a lot of parties that have a stake and get a vote in how this works. So within the cards, the issuers get to decide which wallets they provision their cards to. It's under that deciding it's Apple or deciding it's Curve. It's that the issuer accepts the terms of that wallet, and the wallet accepts how that works. So which banks are going to continue to work with Apple. And I mean, it is the most successful platform. It'd be hard for, my city business. I would not be pulling cards out of Apple, but I'd want to enable, alternatives. I'd want to have, I'm highly interested in enabling alternatives, particularly if, like in Europe, if the Apple fee is, as Shachar said, that the tax is 7 bips. I mean, that's a third of the 35 bip, regulated rate. That's a really high amount. So I'm motivated as an issuer to look at all alternatives.
And Shachar, coming to you on what this looks like for the customer, right? So, it gets open up whenever it does, which I think is going to happen very soon. And, customers can add, say, Curve, for example, to the Apple Wallet or using the Apple Wallet functionality for Curve. How would it practically work for me with my phone? What changes would I see, do you think?
So let's, number one, and connecting to the previous question, you would see your banks doing co-marketing activity, promoting you to use Curve Pay over Apple Pay, because that will eliminate the Apple tax and will impact their EBITDA positively. As a customer, you would sign up to Curve like you would sign up to Apple Pay, and then it will have a notification to make Curve Pay as your default wallet. So when you double-click the side button, or if it's Android, if you proximity to the point of sale, Curve Pay pops out. And it will have a similar experience in terms of payments. What won't be similar, and it's the unique differentiator of Curve, is that you will have all the extra benefits Curve gives you, like the zero effects on all your cards everywhere you go. Also 1% cashback when you spend internationally with Curve Pay, the go back in time, the anti-embarrassment, the double dip rewards, all the insights and budgeting in one place. It's just a whole different ballgame than what Apple is playing. But the experience from convenience perspective is on par. I would like to say better, but it's very hard. Apple built a remarkable customer experience. The hygienic value of the customer experience is very high. And for us, as long as we can meet that experience and still provide more benefits to customers, it's a jackpot.
Yeah, it's an opportunity, but a very high bar. Fliss, I'd love to come to you. Open banking, right? Ordo, your business is all about open banking. So far, we've just been talking about cards, right? Apple Wallet is all about cards. Where does open banking fit in here? Is there a really interesting opportunity for baking in open banking payments into this?
Yeah, definitely. So cards are the enemy. No, I'm just kidding. We can work alongside each other. And that's where I think wallets are going to go in the near future. At the moment, they're dominated by card payments, and Curve has made an innovation on top of that. But I think increasingly Ordo is dealing with and innovating on data. And we see data as a trigger for payments. And when you hold all this data, you can then start to do really clever things that benefit the consumer. And it comes into where does someone pay from, but also when should they pay, and giving nudges about where they should pay to what. And in the future, I think a wallet will then become more than just a card dominant payment method and mechanism. The phone has already turned into us being able to carry around our entire family albums in our pocket to bore anyone with at a moment's notice. We can now, just as Shachar was saying at the beginning, walk out with just your phone and keys, and that allows you to pay with anything. But we see very much the wallet moving in the future to being a choice of card payment, but then a choice of payments. It could be an open banking payment or a card payment, and then encompassing all those smart, intelligent AI decisioning that then takes away even the consumer having to make an action, because there's some intelligent looking and decisioning that happens within that wallet for you. It almost becomes like a filofax for anyone that was a young adult in the 1980s, when it used to carry a photo or two, and you used to stuff all your receipts in it, and it was your notebook, and you might have had a card or two in there. Digital wallets are going to become much more valuable, even more valuable, and have a wider proposition, and open banking is a part of that.
Yeah, it could be interesting routing, right?
So just a few words on Fliss to support her. One of the things we already allow in the Curve wallet is to be able to connect your PayPal account and spend with your PayPal account in real world, as well as connect your what's called VRP, variable recurring payment, your account checking account connection, and spend directly from your checking account, circumventing the cards. However, I am not so optimistic as Fliss is on the elimination of cards, number one, but more importantly, on the elimination of Visa and MasterCard from the equation. And the main reason for that is because in the UK, and as is in Europe, we're very much at the forefront of open banking. They've invented it here, built it here, together with the CMA 7. And what we're lacking is the standardization and trust. And when you think about Visa, MasterCard, everyone believes Visa, MasterCard is a payment company, technology company. And I always say, no, you're wrong. The payments infrastructure is easy to build relatively. What's not easy to build, which is this trust and standardization that Visa provide. How do you deal with fraud and chargeback rights and all this? The API standardization is lacking. And what you've seen in the past few years is Visa and MasterCard, but predominantly Visa, doubling down on open banking. And most recently, just last month, announced account-to-account payment infrastructure, which basically standardized the entire APIs. So one single API to all different account-to-account or open banking, and also introducing their standardization of chargebacks and fraud rules into the fold, leveraging the know-how and the capabilities of the Visa network. The outcome of that, in my personal view, is that if Curve has a choice to go and connect with the likes of Truler, Ordo, Ting directly to have VRP open banking capabilities, which I agree with Fliss, it will become one of the funding sources the customer would like to pay. We're more likely to do it to the Visa network, and therefore you remain in the same place you started, just a different funding source, give or take, mainly because of the standardization and trust that Visa provide, and the regulation has lacked. And I think that if you look at the regulation, it was where the majority of the industry feedback came and criticism about where are the chargeback rights, where are the standardization of API and user experience, that really makes it impossible really to leverage at scale with high convenience for customers, the open banking ecosystem.
I think I'd take on board what you're saying, Shachar. I think that the Visa announcement and their VRP scheme, from their press release, they didn't seem like they had full coverage of all the banks, and that's crucial. It won't work unless you can cover 80-90% of the market, as Apple have done in their wallet, and why they've made themselves so successful, and why Apple has made digital wallets so successful, and why we've been now able to innovate on top of all of that. But I do think trust is key. And I spend a lot of time talking about, do people need to know about open banking and understand what that is? Or do people just want to make a payment and not have to think about it? And you get 50-50. Some people want to know all about it and the ins and outs and the details, and they want to be able to check you on the FCA register. And then for another set of people that are less detailed and just want to get through and make payments, the moment you mention we're FCA regulated, that freaks them out and it's too much for them. So there's always a balance to be struck with different people, but trust is certainly key. And then for all the consumer protections around chargebacks and so on, the cards were invented in about the 1960s and maybe took off in the 1980s. We were in a very different society at that point. There are far more people on the gig economy now. We have far more e-commerce transactions. The chargeback rules, everyone's cross-subsidizing a few bad actors that then don't turn up with the goods. And it's about unbundling the amalgamated charges that have been loaded onto cards and creating a series of choice of payment methods. Because I think I joke that cards are evil. I sort of think they are. But we will have cards and open banking for a good while yet. And it's competition and choice that's important, and clarity, and building the new systems that reflect society today and how people want to pay today and how people are paid today. And I think there needs to be an evolution of card structures from the 1960s for the payment methods and the wallets that we build today.
Yeah, it'll be so interesting to see in the coming years and the extent to which this news from Apple makes a difference to that. All right, and on that note, we're going to take a quick pause here for a break. It's all coming up after this super quick break, so don't go anywhere.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Welcome back to Fintech Insider Insights, where we are looking at what could be the start of the first great wallet war. Before the break, we looked at the landmark EU decision that forced Apple to open up the market. And now we'll be taking a look at how the market for digital wallets is set to morph and evolve as the competition hots up. So the first thing to talk about really is like, how hot is this market likely to become? How much competition really is there going to be? Tom, I'll come to you first. You know, as a customer, am I all of a sudden going to get ads all over the shop telling me to download all of the wallets and integrate it into Apple? I mean, how is this actually going to work?
Well, I think you've got, particularly on the e-commerce side, it's going to be a little crazy in the next 12 months. We've got the large merchant service providers like Stripe providing Link, Shopify, ShopPay, all of these, all of the merchant side are creating wallets. And then we've got Apple crossing the chasm beyond iOS and going to Windows desktops and, Apple Pay, off iOS and Mac OS devices. And then we've got the networks are planning a major release of Tap to Pay, or what's known as SRC and rest of world, and US is called Pays. And with that, a lot of rule changes. But I think, and then we've got payment wallets, and we've got the world of identity wallets, like what's going on at EIDAS and in Europe, and identities coming out in other forms in other countries, and also sovereign kind of national schemes, whether that's Pix in Brazil or India UPI. So regionally and globally, we've got a lot more wallets coming to market. Really, one of the things I like about Curve, it's very focused on point of sale and really enabling a new paradigm, because the reason all of these e-commerce wallets exist. Because that's easy. That's the easy part of getting a card stored and making that presentable. And the barriers like an Apple platform, what we talked about of a secure element being unavailable, those very big walls around the walled garden that Apple's come down that recently. The point of sale is where 80% of card volume still happens, right? It's where all the experiences, the main reason how we interact from person to person. And I think that's a place where we of tremendous opportunity for innovation. And thinking about, as we ended that last segment, of how consumers pay, we're very much locked into the same paradigms of, hey, I want to pay with this plastic Barclays card, or, I'm just using the Apple Wallet presented. Well, really, you think about, we all want to support, every merchant wants to support consumers the way they want to pay. Why aren't we doing a transaction and then allowing the consumer to decide how they want to break it up across their accounts, right?
So interesting. Shachar, how do you see this market sort of reassembling?
So it's absolutely true that the next 12 months going to be the war on the e-commerce side will be much stronger. Indeed, you have Click to Pay, which is SRC by Visa MasterCard, called Pays in the US, Fastlane by PayPal, ShopPay by Shopify. And when you come to the point of sale, which is the real challenge, in fact, not just point of sale, you want to create a wallet that enables the customer to use any omni-channel. So whether it's online, offline, ATM, and that's one of the things that Curve is really powerful about, because you can pay with your phone, you can pay with a card, like with an ATM where you cannot pull money with your phone. E-commerce, if you have the card number of Curve to put it inside one of the Click to Pay or Shopify. So it's true omni-channel solution. But the real paradigm shift that we're seeing, or we believe we'll see in the market, is that, and you start seeing those seeding of those also with other companies, not just with Curve, is that going forward, you will have one customer, one credential, and the identity is connected to that customer. And from that customer credentials, you have multiplicity of accounts allowing the customer to pay however they like. They want to pay from the crypto, from Tether, they want to pay from their VRP open banking, they want to pay from their debit card or credit card. They can decide to do it before or after the fact. And all they have to do is just a way to communicate to the merchant their ID to move forward. And that's the real paradigm shift that Curve did, which enables you to have a omni-channel solution on the front side. I can pay online, can pay offline with my phone, with a card, and a multiple fungible ecosystem behind the scenes, fungible across currencies and accounts and funding sources, from PayPal to open banking to crypto to card accounts, to be able to pay out as much as you want. And we've seen this paradigm shift happening also in the market elsewhere. I think the main kickoff point we've seen is Visa introducing the Visa Flex Credentials product in May this year. And at the payment forum of Visa last month in Paris, we saw Visa talking about their vision of going forward, every customer has to have one credentials, identity connected as credentials, and allow the customer to pay from whatever funding source they want, the bank, open banking, card, PayPal account, whatever that may be. So we'll see more of that paradigm shift coming into play. And you would start seeing, as you see, even Apple moving to the space of identity. But the real question that becomes on the wallet wars on point of sale is, Apple provides such a great experience, and no doubt. And I agree with Fliss, they have a remarkable following. So if I want to win the wallet wars, what is it that gives me the right to win? In not putting marketing spend on your head is not sufficient, because why would I leave Apple? It's working pretty great. I have to move to another competing wallet because that competing wallet gives me a remarkable opportunity or benefits that the current wallet technology of Apple doesn't provide me. And this is where the rub lies, where the only wallet technologies that are available in the market today, outside the Curve proprietary technology we built, is the pass-through wallet, which basically means that any wallet participant, any player that wants to try and win the wallet wars, the only technology available to them is the same technology Apple has. And Apple owns the OEM and the hardware, so they will always be better off in the experience they can create. So therefore, in my view, the wallet wars ended on the point of sale before it even begun, unless you have a technology that you're building like Curve that can really show a benefit to the customer, like to like. Go shop with Barclays and Apple abroad, pay £60 in fees. Shop with Barclays with Curve, pay 0 fees. No change of behavior, no new card you have to sign up to, no need to buy currencies in advance, no need to change your bank. keep the bank you love and trust, but now without the fees. A very simple proposition we know was very powerful in Europe and the UK, but no longer attached to a card, but attached to all your cards through the wallet experience itself. And that's, I think, where the challenge lies to all the players in the market. They're trying to do omni-channel with available technology in the market.
I guess it's really spurring innovation. This is forcing everybody to think about what those differentiators are going to be. Fliss, I want to come to you, and also a question to you. We have so far managed to get through this podcast without talking about BNPL, so I'm just going to talk about BNPL. Do you think that is also a differentiator as well?
Yeah, I think that's another option that people like Curve and other wallet providers can add to their offering that will draw people away from using Apple Wallet. It's about giving consumers what they want, but actually usually offering consumers something that they didn't know they wanted, and then enticing them away, and then getting them so used to it they then look back and think, how did I ever live without this? It's about the added benefits that you can have. And I think BNPL, and we've all been talking about omnichannel and a choice of offering, it almost will go round in a full circle. We had the CMA order for open banking and trying to allow fintechs to disintermediate the banks to create competition. Actually, I think once we get to fuller wallets, being able to do and hold your identity and your receipts and look at, with open banking AIS, you can monitor what money you've got coming in where, or what money's spare. It could then bring in the banks again and bring in other more traditional financial providers as an interest to that, because then people can then look at, well, where can I send money from this wallet, perhaps with some smart decisioning done by AI in the middle as well. And banks will want to get involved. Banks ought to want to get involved in that and offer savings products and make them reachable by wallets, pensions, investments. And suddenly it becomes more interesting again to banks, and there'll be a revenue stream there. So banks should then be able to get interested in this again and offer their products to be reachable by these smart wallets.
You've all mentioned identity actually in different guises, and I think it's worth double clicking on that a little bit. So Fliss, for example, in the UK, we don't have a national identity card, but in other countries, open banking and ID are so inextricably linked. Is there some kind of play where a digital wallet comes in and says, no, we're going to be that sort of central, single view of the customer, single customer credential, and could open banking play a role in that?
Yeah, I think so, definitely. There's APIs available, and banks have to do KYC on their customers, and some banks do it better than others. But rather than having everyone send off their passport and the utility bill that can get you anything to lots of parties where there's lots of delivery and chance for fraud to happen, let's centralize it a bit more. Let's make the channel secure, and then partner with consumers. It's almost businesses and financial providers then being the trusted partner to bring in trust, as Shachar mentioned a while ago. Making it a holistic, consumer-friendly service rather than these separate, siloed, mechanistic products that consumers just have to do in their lives, like verify their identity various times and make a payment. Putting that all in the middle and bundling it up as a service, that would be very useful to consumers, especially time-strapped consumers.
Anyone want to come
in? Maybe adding on that, I would separate two capabilities. One is the KYC element, and the other one is the identity element, like showing a police officer your driver's license. So we always start seeing adoption in different states in the US, and Apple to bring identity into the wallet. So you only have one phone, your keys are there for your car, your keys are there for your house, and also your identity is inside. It will take some time for many other countries and states to catch up and standardize the regulation around that. And it all sits in a secure element passkey. So that's pretty safe from the technology perspective. The other element there that Fliss mentioned is the KYC element. And that's where I see the real value to consumers, because today the main challenge for consumers in identifying the right financial product for them is number one, awareness, number two, time. I'll give you an example. We have a lot of customers in the UK, about 25% of them, that are revolving on a very expensive credit line, call it 30-40% APR. Any one of those wallets can go to any banks, any high-speed bank, and tell them, would you mind refinancing the credit line for me? And they will get a loan for 15-70% APR, still expensive, but much less expensive than the revolving credit line, a 40-50% APR. And yet, no one is doing that. The main reason no one is doing that is because of awareness. And number two, time. You have to go provide documentation, due diligence, and KYC. And that takes time. Thirdly, is the same experience of signing up to a new financial product like a credit card through Money Market or Compare the Market. The wallet that will own the KYC, and Curve is a good example, try not to steer away from sounding like commercial for Curve, but we just did all the stuff that we're talking about already. We own the KYC of the customer, the documentation, identity of the customer. We have to do it for our own compliance. But then when we bring offering to customers, for example, we give offering to customer to sign up to a new card product or take a loan from a new third-party supplier, a bank that can refinance the credit line, we are able to pass through the KYC documentation we have with the customer permission, helping the third-party financial institution to onboard the customer to the product with a tap. So the wallet will eventually become the identity in two ways. The first way is just holding your ID to present the entrance to a store if you need to, or to a police officer. And the second one, which is I think more instrumental to the industry, is able to pass through the KYC to reduce fraud across the ecosystem, and reduce AML risk across the ecosystem, and allow to easy onboarding of customers to new financial products and services, eventually optimizing their finances.
So that's the big play here, actually, is owning KYC and almost becoming like a front door for fintech. And if you can
owning
have
the customer.
owning the customer, but then also having the kind of the permission and the rails, because everybody talks about owning the customer, right? Literally everybody, all different types of business models. But I guess the play here is being able to say that you have that primary payment customer relationship, you have the KYC, you also have the access to the banks and various different financial institutions that are a part of the wallet, and the rails, which will allow you to be able to switch the credit from one provider to the other, to be able to act as a bit of a marketplace for various different. That is absolutely fascinating as a new way.
In fact, the way we talk about the curve, think of it as a triangle. That in the two bottom side of the triangle, you have PayTech, which is what you refer to the rails that allows you to create unique experiences. And the second part of the triangle is data. And the data is not just the KYC data on the customer, it's also their financial data to know when to trigger a promotion. We can now save you £300 if you take this loan to refinance that credit line, things like that. So at the top of the triangle, you have the user experience that is the outcome of leveraging the PayTech rails, as you call it, and the data rails that the wallet has. And again, here, another challenge with a pass-through wallet model of Apple Pay, Google Pay, Samsung Pay is the pass-through wallet by definition, on purpose, do not have access to data, i.e. they do not have ability to understand how customers spend their money across which accounts, how much money they're paying on each account, what's the APR. They just lack, it's completely pass-through. They can't see anything, which means they're not in a position to provide insights, budgeting, and promotional products to the customer. That's a disadvantage of the pass-through wallet. But again, without sounding like a walking commercial, Curve has solved with its cutting-edge wallet technology.
That's so interesting. And all of that gives you access to just more fees, right? So it's if payments is becoming commoditized, then that is a much higher fee base. Fliss, go for it.
I was going to say, and that's exactly where I think the value will come from, all of those products coalescing to then comprise a single service for a consumer, which is smarter and informed rather than just mechanistic separate payments.
Absolutely. And I suppose all of this comes back to Apple. So Tom, I'd love to come to you on this and get your views. It seems that if Apple are saying, look, we are no longer going to try and, lock people out from NFC, we're going to open it up. We're not going to try and become a bank, as everybody was, hypothesizing that they would do at some point in the past. We're not going to own the sort of KYC. So actually what that's left with is the identity of the customer, which is like a non-insignificant kind of thing. And we know that Apple, doubled down on privacy and trust. And that's one of the most amazing things that makes the Apple Wallet work so well, right? It's just tied so nicely into identity authentication that you don't even need to think about that. But if they can, open up the ecosystem, let other people play in it, and then they just maybe double down on ID. Is that where you think the play might be in the future for them?
Well, I certainly, to your point, I think Apple as a platform stands out because of how it manages security and privacy from software to firmware to hardware, and it's best in class, and it's the most secure digital vault that most consumers have access to, right? So I think on the world of identity, there's not one identity, there's multiple identities, right? There's the identity for your biometrics locked in a platform. It never, your biometrics never get set in the cloud. It's every device you've got to re-authenticate yourself. There's the bank identity for a given bank of the work that they've done to KYC you. That's actionable and usable by that bank. Would another bank trust that identity? Perhaps. Would a BNPL provider? Well, depends on what your credit standing is there. And then there's government identity. Even in Europe, with EIDAS, you've got the challenge that the technically, I can use an EID to validate a person, but the law isn't there. Just where you've got the European banks contesting this is not a requirement under PSD2 that I've got to accept an EID. I don't have to do that just because of the provenance of how EID was developed. It works within government services, but not necessarily banking services. So you have in the Apple platform a storage tank, if you will, of multiple identities used for different purposes. And I'm quite sure Apple's view is that those are the customers, they belong to the consumer. How it is used and how how the assertions are made against those identities, that I think that's the world we're developing into right now. The most important identity that's used day to day is the one that Shachar just outlined of what's tied to payment and for authentication on payment. And really that's what one of the big waves that Visa and MasterCard have ridden is that your card is the binding of payment identity is what has really helped propel cards, particularly in the e-commerce world. How they get pulled apart and who trusts whom, that's the next phase of evolution for the platforms, and I think we're getting there.
So fascinating. And listen, everyone, on that note, that wraps up today's discussion. Thank you so much for joining me, everyone. This has been such a fascinating debate. Where can people find out more about you all? Shachar, let's go to you.
Curve.com.
Nice and simple. Check that website out. Tom.
Yes, Starpoint, my blog.starpointllp.com.
Awesome. And Fliss.
Yeah, hi, thanks. I'm on LinkedIn, Fliss Berridge, or ordopay.com.
Amazing. And you can find me on LinkedIn at David BG. So thanks for listening, everyone. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps to make it better and helps others to find the show. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider or email podcasts at 11fs.com. Thanks very much and goodbye.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.